Hi, I'm Fraser Campbell and I head up the Accounts and Business Advisory team across the UK here at Azets. I'm delighted to be joined today by Praveen Gupta, our Head of Tax, and Clair Williams, our Head of Employment Taxes. Thank you both for joining me. We're going to spend a bit of time today talking about business resilience with a particular lens on tax. We know that the last 12 to 18 months have been tough for businesses out there, and substantial changes to the tax regime have kind of played into some of the circumstances and issues that businesses are facing. So we're going to focus on a couple of areas, one of which is employment taxes, and the second is on business and corporate taxes around reliefs, and really focus on how do we look at both of those areas and help businesses take advantage of opportunities that are there and minimise the downsides in order to build a bit more organisational and financial resilience into your business. So Praveen, I'll start with you. When it comes to tax reliefs and managing tax liabilities, I've heard people say that tax is the single biggest overhead that a business has, and a lot of people might view it as being a uncontrollable overhead because it's fixed. Tax is tax. What can businesses do in order to manage their tax position and make sure that they are able to pay what's due and also take advantage of all the reliefs that are out there?
Okay. I think you're right, Fraser. I think tax is clearly an overhead of a business. There are many tax reliefs which sometimes get overlooked by businesses and business owners. So, for example, the R&D tax regime, I mean, it's gone through quite a lot of changes over the last few years, but it's still a very valuable relief available for all companies. In addition to that, there is capital allowances. So if businesses continue to invest, there's full expensing, and in a lot of cases, companies can get 100% relief, which not only allows them to make those investments, it also helps their cash flow. There's also kind of slightly more fringe kind of reliefs, like the patent box. So if companies are carrying out really advances in innovation and have got patents within their business, then the patent box regime, if you qualify, then it does allow you to get that lower reduced rate of corporation tax. So lots of reliefs are available, and then also sometimes there's businesses that are unfortunate because they've got losses. There's lots of loss planning that companies can do, and sometimes looking at more established companies which might have a number of companies established in a group, for example, could allow you to offset a loss against a profit-making entity. So there's a number of reliefs that are still available, which helps you address that kind of overall tax liabilities that a group or company may have. But I think the key is planning ahead. Key is to really spend some time, as you would with any other P&L item, to focus in and manage it. I think it's one of those areas that does get overlooked. So, for example, you might manage your heat and light expenditure and focus on that and get various different quotes. You may not spend that same scrutiny around your tax liability.
So that's a really interesting analogy there, to actually treat it like any other item that you would put under scrutiny and make sure that you are addressing the issues and opportunities that arise within that particular tax category, as it were.
It's multifaceted, isn't it? And so bringing Claire into the conversation. I mean, the release I've talked about are impact corporation tax, but then clearly, for a lot of employers, employment costs
is a single biggest cost,
isn't it? So within employment taxes, you've got lots of other opportunities, which I'm sure Claire will mention.
I know. Just nice segue there, Praveen, thank you. just in terms of employment taxes, since the last budget, they've been a bit of a hot topic for all businesses, particular sectors such as hospitality, agriculture, seasonal working, perhaps retail maybe affected a bit more than others. How have you seen businesses absorb the changes to national minimum wage and NI? How's that kind of, because we're now into the year that it's taken effect, How's that going?
Yeah, I mean, it does depend on the business. As you say, there's different industries have been impacted harder.
Yeah.
Obviously, the industries with people that are lower paid have to make bigger increases to people's wages to stay compliant with national minimum wage, for example. So they've had quite a tough year.
Yeah.
And unfortunately, I don't think that's going to change going forward. The Low Pay Commission has changed its projections for national minimum wage next year, and there's going to be another uplift we're expecting. The main way that businesses stay resilient is understanding the data. I know that my advisory colleagues have already talked about management information, making sure that you understand what information, your real-time information looks like as well, being able to adapt and make changes, model out potential issues, stress test information, so that as changes are made, you can prepare for those changes being made as much as possible.
And in terms of managing the reward and incentivization of your workforce. Now, clearly, pay is just one element of that. Employment taxes go beyond just pay and look at total reward. Are there maybe some other ways that employers can, in a more cost-effective way, retain and motivate and incentivize their staff other than just NI-able costs?
Yeah, absolutely. I mean, most staff these days are not just looking for what's my salary.
Yeah.
A lot of staff are looking for the extras, so that might be on the well-being side.
Yes.
Some of them can be quite simple. It might be that you give people an extra day's holiday, if that works for your business. It's very much about looking at your business, understanding what works for your business, and also what your workforce will welcome.
Yeah.
There's no point in investing in something that the employees are not going to engage with. So you need to understand what that might look like before you throw a load of expense at it, would be kind of my starting point. There'd be things like, will salary sacrifice schemes for your work for your business? They might not for some, they might for others, but if there's something that works, you can get significant employer and employee savings as a result of implementing salary sacrifice. Things like share incentive schemes, depending on the nature of your business. Again, if you're looking for growth and you're looking to exit a business, you bring the employees on that journey with you. You give them part of the share capital in the business or the ability to access that share capital, so that they might at some point sell the shares and get a capital gain based on the growth in value of your business. There are things like private medical. We are seeing a lot more employers offering private medical nowadays, basically because of the NHS waiting list, I think is the main reason there. So there's a lot of people that are interested in private medical and similar benefits.
Yeah, so there's actually quite a lot outside just, cash, as it were, and salary.
Absolutely, yeah. I think, to be honest, I think nowadays to stay attractive as an employer, you have to offer more.
And some of those can be slightly less costly than straight salary alternatives.
And you can be quite flexible in the benefits packages that you're offering as well. I didn't mention pensions before. Looking at the pension scheme you're offering and saying, can we make this more competitive? Are we aligned with our competitors as well? Those things are really important. But in terms of keeping a business resilient, it's understanding how you're going to keep your workforce, how you can do that cost effectively, and how to maximise the return. So
similar to what Praveen was saying in terms of, create a strategy around your profit-related taxes. Create a strategy around your people reward and incentivization strategy, and don't just focus on the fact that NI's gone up by X%. Look wider than that, and what more creative ways can you look to retain and motivate your workforce? Because ultimately, a well-motivated, loyal workforce is a key part to a business's long-term resilience. Praveen, just coming back to you a little bit in terms of that whole managing tax cash flows and making sure that there's no surprises. Have you got any kind of practical thoughts around how businesses can make sure that they don't get a tax surprise when they least need it?
Yeah, I think it's that active management piece, Fraser. I think we sometimes talk about rolling agendas, and I think it's that just ensuring that you know what your tax liability is going to be, and when that payment's due. So we know, for example, very recently, HMRC have increased their interest rates that they charge now for late payment of tax to 8%. So that's a big cost. So I think having some clear line of sight around when your VAT liabilities are due and how much they are, when your employment taxes are due, and together when your corporation tax is due. Again, there's been a lot of changes recently around payment dates for corporate tax, and there's a very large regime now for quarterly instalments, and we still find that companies, large groups, sometimes fall foul of those rules, and all of a sudden they are late in paying their corporate taxes, and then all of a sudden you've got
penalties
and
interest.
So it's very rare to see a penalty on late payment of tax, but it can happen. But I think the key is only to have that line of sight about your group. And sometimes when an M&A transaction happens, and all of a sudden
people forget about the tax consequences.
Correct, absolutely, and all of a sudden you've got a much larger group. So all of a sudden you can fall foul of these rules. So in terms of advice to business owners and groups, it's just that sitting down with advisors and ensuring you've got a plan. And that plan needs to cover all elements of tax.
And Claire, just on that, kind of when things maybe don't quite go to plan and you fall foul of some of the HMRC regulations, what are the kind of things that you see happen most often from an employment perspective? I mean, am I right in saying that employment tax reviews can sometimes be, I hate to use the word, the most lucrative for HMRC as opposed to more straightforward taxes? I don't want to play them down, Praveen, but you know what I mean. There's a lot of legislation out there.
There's a lot of legislation, and the other thing I would say is employment taxes are not looked at in as much detail internally within the business. You come to do your corporation tax comps, you have to look at them every single year. You have to look at your payroll every month.
Your PAYE just happens.
It just happens. Also, businesses think. So in terms of things like processes, the pitfalls that we tend to see coming up time and time again would be things like off-payroll working. So people that are not directly engaged with you as an employee, you need to consider whether they should be subject to tax in a similar way as an employee might be, and there's all kinds of legislation there. Things like looking at your expenses and benefits policies, understanding travel and subsistence rules, for example, how they apply. You'll have some people that have more than one permanent workplace that are travelling around regularly that might not get tax relief for the expenses. So understanding whether you have anybody who will be caught by that. It's very much about policies and processes, making sure that you are updating them, adapting them, and remaining compliant.
And is there ways in which we can practically help clients with kind of highlighting those areas that might be the pitfalls?
Yeah, absolutely. I mean, one of the services that we offer is to go out and do PAYE health checks, we tend to call them. It's basically us kicking the tyres of the business.
It's basically what HMRC would do as their initial scoping?
Yeah, exactly. We go out and we'll have a questionnaire. There'll be a lot of it that's not relevant to the business that we can just whiz straight through, but it will help us to identify the areas of potential weakness or opportunity, as the case may be.
So actually maybe that's something which, if you're wanting to build a bit more resilience into the management of that P&L item, that might be something worth thinking
We talked about management information before. It's all right having a load of data, but you need to understand
and you make sense of it,
where the weaknesses are in that data.
Brilliant.
And those health checks actually can be more wide-reaching. They could extend to VAT, corporate taxes, customs duty. I think that they're a really useful way actually for businesses who want to stay ahead and be resilient. Because back to your point earlier, you try to avoid surprises. So actually by making those small investments, actually sometimes it does
pays off in the long term.
Opportunities, but also it manages your risk.
Brilliant. For me, that's the priority for business owners from a tax perspective. I always recommend that they understand that, because it's all right focusing on a particular area that they think is the problem, but actually they might have a much bigger problem around the corner.
A blind spot.
So I would much rather, if we're taking on new clients, I would much rather say, look, we'll come out and have a conversation with you. Let's understand what's going on in the business that we can help with.
We can deal with unknowns, but it's the unknown unknowns that are the ones you need to worry about.
Absolutely.
Brilliant. Thank you very much, Praveen. Thank you, Claire. That's been really, really enlightening. And hopefully you managed to take some practical points and tips away there from a both employment and mainstream business tax perspective. If you have any questions at all around any of these topics or anything else around business resilience, please feel free to get in touch with your usual Azets contact, and we look forward to helping you. Thank you.